Hello, ladies and gentlemen, and welcome back to another video. The market is crashing. Michael Burry, the Big Short, is back, and GME is the best positioned company in the entire market to take advantage of these conditions. I say that partially joking about all of those things mentioned, but without further ado, this is not financial advice. This is strictly opinion commentary, and anything I say in this video is strictly my opinion and most certainly not financial advice. So without further ado, let's dive into a jam-packed video today. And the market is really pulling back big time, and we're seeing it. I'll show you guys before we get into Michael Burry's return with a crazy big short against the market. And at the end of the video, we have some really crazy GME theories I wanted to share. Not putting a whole lot of stock into those, but I do think they're worth noting. And then a little bit of a GME model update to come in the middle of this video, and if I think GameStop should do a share buyback. But you can see S&P futures, pulling back. And again, like, this is not a huge pullback. It's 2%, but everything sells off when this happens. And in the past, it has technical wise bounced off its moving averages and continued its vertical assault upwards. Russell futures, same exact thing. Now, Russell futures, which is probably more applicable to GameStop, did break through its simple moving averages here, both of them, and is down about 5%. This does not look as good. Could be a double top here. So we'll keep an eye on this. And you can see the cat ears too. Let me know in your comments below if you guys think the market really is crashing here, if it's just a bubble, if it's going to burst. Same thing with NASDAQ futures down just 2.5%, but you can see the gap didn't get filled, so could have a little bit more downside. And then again, test the simple moving averages. If this breaks below, that's where I think the bears would be in for a little victory. If this holds around 25, 182, then I think we'll continue upwards. I mean, big tech, by the way, is still, if you're reading balance sheets, if you're reading earnings reports, just fine. But let's get into Michael Burry, the greatest of all time short, and he made his return to X kind of a few days, weeks ago, whatever. He updated his X banner and then ended up posting a tweet yesterday that essentially a bunch of different charts about AI, where the money's flowing, what companies it's going to, basically how NVIDIA is being propped up by its customers in a way. And it essentially, in his viewpoint, I mean, look, this is just, even the chart is one big bubble. You can see US tech capex growth, same as 1999 and 2000. It's clear as that you don't have to be a financial licensed professional here to understand that he's saying that this is a bubble. You can also see cloud segment growth year over year, and it is declining. So, he's basically saying growth is down. NVIDIA's I don't know if he's calling it a Ponzi scheme or anything to that effect, but you can see he's putting his money where his mouth is. He just put close to $1 billion of worth of puts into Palantir. By the way, Palantir, and I want to say this about GameStop, a company like Palantir, which again, they do some super high tech tracking, defense contracting, all of those things are true. But talk about forward guidance and inflated stock prices with the future facing revenue growth. That's what Palantir benefits from. GameStop, by the way, is that literally it's trading its cash balance at its market cap. We'll get to that in a minute. But GameStop, I just find it terribly ironic that it does not and will never have any analysts or any Wall Street hedge funds, institutions, etc., go big or release some sort of guidance on GameStop being a buy rating or anything to that effect because of potential future facing revenue. Ironically so now that the fact that we are in a console cycle with the Switch 2 flying off the shelves, collectibles growth is up 33% year over year, no analysts will go near the stock. Meanwhile, we have analysts at JP Morgan, all the big wirehouses, etc., rating Palantir with buy ratings way inflated, way future facing, and not concrete in the quarter after quarter reports matching reality. So that's kind of my tangent aside. But Michael Burry, the Big Short, he is back big time with some big time puts against Palantir. NVIDIA, he's got almost a $200 million short position against there. And then he does have calls on Halliburton and then I think Pfizer as well. I wouldn't touch the latter there, but he is a more seasoned investor than I am personally. So we'll give him the benefit of the doubt. So that's interesting. Now, whether you think Michael Burry is saying, the market's going to crash or really it's just two companies that are going to bring down the market, Palantir, I think, can come down and nothing is going to crash and burn around it. But if NVIDIA comes down, I think that's where we're going to have the problem. Now, let's segue this. What does this have to do with GameStop? I'm going to fast forward if you don't tell me soon. I'll tell you right now. What does this have to do with GME? Well, GME is now down to $21.89 right now. And I just posted this on my X account. It is trading at 88%. Its cash is trading at 88%. Representation of its total market cap at $9.9 billion. So $8.7 billion worth of cash represents 88% of $9 billion of its market cap. So of course, GameStop is never going to get the benefit of the doubt from Wall Street pundits, from analysts, even on the expected earnings numbers. I always think that they are slightly inflated to make GameStop really have to work hard to beat those numbers, but that's neither here nor there. Let's look at the facts. We know that GameStop has $8.7 billion in cash, and before the bears load up the comments here with, oh, some of that's liability still. Well, yes, a 0.0% coupon will show up on the balance sheet as a liability. That is a fact. I'm not going to deny that. But you would also be crazy to not take a 0% zero coupon for a 5-year duration. That's unheard of, especially with that amount of market or that amount of capital, by the way. So let's be honest, though, in our assessment here, this is not looking good for GameStop. We are at 21.92. We are on the 4-hour chart. And to hit this line, we've hit it 3 times, just 3 times since June. So June, we did it in August, and we're doing it now at the start of November. So this is an area, by the way, where GameStop does bounce from. And it's lazy TA. And TA, I think if you guys have been watching me, I like TA. I'm versed in TA. I'm seasoned in TA. But when it comes to a stock like GameStop, it's not always foolproof. It's a nice piece of the puzzle. But you can see that this line in the past, go back to the bond offering territory, and right before it, GameStop tends to rocket out of here. Here's a 35% move. Here is a 50+% move. And then go back to last year. Ironically, the same time last year, we had a super deep low at late October. Early November rolls around and we get a 60% run up. Now, I want to be more enthused about GameStop now at these lower levels than I am at $30 when everything's hunky-dory and we're all holding hands singing Kumbaya. So that's personally, a level that I look at as, okay, here's an expected bounce. But again, it doesn't have to be that way, especially if the whole market's going to pull back. Now, with the cash, let me know in the comments, do you want GameStop to do a massive share buyback? Me personally, this level is too rich for that to happen. Now, again, yes, you can say GameStop bounces off of it and they could make a, 30% on that huge pile of cash. Could, but they'd have to, potentially sell the security back on the open market. It would dump the stock. It's not good. If you're looking for a buy and hold scenario, you'd want them to really buy it down in the high dollar number, early, low $10 range. Otherwise, it does not make any sense. Even think about this, buying the stock back down here does not generate revenue for the company. It can generate positive earnings per share growth, as Bitcoin will occasionally when it's up on their investment. When it's down, it could take away from that. I don't see GameStop going this low, by the way. I think that would be absolute insanity. And if it did, I would be 10x more bullish than I even am now, and I'm 100 times bullish now. So the fact of the matter is this. I don't think Ryan Cohen is waiting for the pitch down the middle to do a share buyback. I think that's well too rich at this point. I think GameStop's due for a bounce, and we'll look at the model here in a minute. But what do they need to do? They need to deploy their capital when the moment is right. And if this is a bubble and Michael Burry is right, GameStop will be the best positioned, one of the best positioned companies in the entire market to do that with close to $9 billion in cash. What they need to do with that money is get this revenue number higher quarter after quarter. If Ryan Cohen has a deal on his table that says we can add $100 million of revenue per year for your company in exchange for X amount of your capital, they do that deal and they don't look back as long as it fits their business profile. Why? Because then these numbers get higher by 25 million every quarter, whatever it's going to be, however much the projections are going to be. 25 million a quarter higher, that is money in the bank for GameStop, and that's what makes Wall Street analysts change their tune. Now, let's dive into the model update and let me know, guys, let's get some good discussion here. What should they do with their cash? Is it time? Should they wait? I think people in general, the sentiment is that people are losing patience with this stock. And I think they look at companies like Palantir or like NVIDIA and say, oh, I should have just put my money there. Well, GameStop is a far more unique circumstance. Now, are those companies better positioned to do better earnings numbers and generate more revenue? Sure, at this point in time, absolutely. NVIDIA was not even in the same sphere as the brick and mortar GameStop, piece of crap retailer, as Ryan Cohen says. But GameStop is getting there, and GameStop is growing collectibles. They're doing the right things, and they're doing it the right way. Now, the model, what's the model saying? Well, the model, I am going to give one more week, I think, before I am going to start declaring that the model is not working. Now, clearly, we are in some sort of swap here, and I'm getting a lot of questions about what is a swap, this and that, why is it affecting the stock? Quick general overview. There's a post on Superstock from a while ago. And there's a lot of these posts, by the way. I don't know if any of these people are Roaring Kitty, but they certainly have knowledge like his. And they essentially say that swaps, there's a big misconception about them. Swaps do not contain shorts. It's actually a hedge to the swap that has the short position. So they're saying a swap is basically a contract between the hedge fund and the prime broker that creates a synthetic position. And the parties agree to pay profit or loss, can go either way, to the other party. So if the hedge fund goes short on GME in a swap, the prime broker earns money if it does not go down. But the prime broker is not interested in betting against the hedge fund. They are interested in two things. One, interest rate, and two, balance sheet benefits. So the prime broker hedges the synthetic short position of the hedge fund by going short the stock. That's why you see insane downward pressure when there is a swap. They are hedging that massive position. Again, we've seen numbers up in the $250 to $500 million notional amount with those swaps. I think that's probably accurate. And I think that's why you see significant downward pressure. So the prime broker can be creative in how they hedge the position. They can hedge it with stocks in companies, one-for-one share swaps, derivatives, and these things get way more complex. But at the surface, just know that these swaps are not just one giant, oh, this is the short position here. They are hedging their swap position by shorting the stock heavily. And this is aggressive shorting, 23% down after a great earnings report. Stop me if you heard that before. But the model essentially, if we are still in swap season now for the next little bit, is not showing a lot of relief. It's showing upwards of $26 on the relief. Now, the fails to deliver data that is due, and bear with me a second, this chart is super molasses slow. They are saying the original Babe Ruth graphic was November 10 through November 20th. So let's hold out our full opinion on whether the model is broken or not until the 20th. Let me know down below. Do you think it's over? I don't. And we're still seeing a ton of fails coming due. Now, are we looking past that point of T plus 33? Yes, but the last would be on November 10th from T plus 35 from the September 25th slam down. Let's visualize that for all the folks here. So the slam down here, T plus 33. There you go. Around November 11th. So we're going to give it another week. I'm not moving any goalposts. This drawing is locked on the chart. This might look like the worst thing of all time when it's all said and done. I'm not moving goalposts. We will pay attention to that. So a lot of fails to do. Now, can they kick the can? Well, there are not fails being reported yet for the first half of October. I believe that date is due, and per my knowledge of the SEC rulebook, should still be reported even during a government shutdown. We'll keep an eye on that. But there should still be a big crop of fails due. And if they're not due, or if they found a way to kick the can, they're going to start showing in other various ETFs that contain the underlying, in this case, GameStop. So I would be excited about that as well. That's it really on the model. GMEU, fifth day on reg show. The thing is a disaster. I'm in a war on X with the fund manager. It's hilarious. The guy is totally a stooge. I'm not even going to give him the light of day on the video today. But I want to tie back to the theme of this video. 5 profitable quarters in a row for GameStop, and now the market cap is almost equal to cash on hand. That is so egregious of the market to even price GameStop like this. I don't even have words to express it. But as GameStop shareholders, we have to get used to these shenanigans, period. Now, the tinfoil that everyone's waiting for, I teased it in the start of the video. I don't subscribe to this stuff. I like to recap it though, because I find it interesting. And if there is any semblance of this being true, it is very fascinating. The Chop 1199 on X says, I woke up this morning thinking about going back 1 hour for daylight savings, and something dawned on me. This meme, think about the lyrics, and it's a Roaring Kitty meme, and the daylight savings cycle since it was posted. You'll go backwards, fall of 2024. You'll go forwards, spring of 2025. You'll go backwards, fall of 2025. So I don't really know what this is saying here. I mean, you could depict every single one of Roaring Kitty's memes. The lyrics, you'll go backwards, you'll go forwards, you'll go backwards, but then you'll go. So I think essentially they're saying forwards, backwards, and then boom, bang, bang, I guess. Who knows? I mean, again, like that's decent tin. And then we got another drawing on the Robinhood 1 tick chart. You guys tell me if you see anything here. They're saying a poodle. This is definitely what I would call a crap post. I don't see anything in this. I mean, I'll zoom in. I mean, this is I think why we need to have more credibility than some of this stuff on Superstock. It's funny though. I get a good laugh of it, and I think we all need a little bit of that in these current market conditions. But to put a bow on today's video, I am not worried about GameStop stock. This is a very attractive range. If it goes even lower, I mean, I'm just going to have to look in the couch for coins and everything else to accumulate more. And I always think back, where's Ryan Cohen buying in the low 20s? Where's Roaring Kitty's cost basis last known? Around $23. We are below that. So you'd have to think that if they are good investors, that I would put myself in their shoes. This might be a decent range for me to think about, taking more shares or starting a position. That's just my logic. I'm not saying that for anyone else. I want to be crystal clear about that. In the meantime, let me know what you guys think in the comment section down below. I hope you have a great day, and go GameStop.